welcome to Trailblazers. Today I'm here with Hans from Combinator. Hans, can you start off by telling us a little bit about yourself and how you came to be working at Combinator?
Hey, Jack. Great to be here. Um, yeah. So I originally was working in AI, actually. I was doing reinforcement learning at a defense company, working on like autonomous drone systems. And I kind of got super pilled on crypto in 21. Obviously, there was an insane bull run, but it just seemed much more interesting to me because it was kind of like an open, permissionless environment. Whereas I think AI at the time, um, kind of required a degree to do anything interesting, which I was like kind of allergic to. Um, and so I quit that job, met with my co-founders. We all went to high school together, and we just started iterating on problems within crypto. So I spent some time in NFTs, et cetera, et cetera. And today we were basically spending a lot of time, obviously on Solana, because I think that's where a lot of usage is. And we were kind of unhappy with the state of token launching. We think like a token itself is like one of the core tools that crypto enables for a lot of reasons. But I think obviously like meme coins, I think actually limits a lot of what tokens can do. Um, for good reason, right? There were rugs before that and whatnot. Not that there's not rugs on pump, but they're kind of different. But I basically think like tokens are an extremely powerful tool that are like severely underutilized. And we want to make it easier to use tokens in a way that they can provide like actual value. Um, and we discovered decision markets early of last year, and we just thought it was extremely difficult to basically use tokens with decision markets in a way that was effective. You know, obviously you have MetaDAO, which I think popularized it for a lot of people, but they kind of have a verticalized stack where it's not really self-serve. And I also think the use cases are limited. So we basically want to provide infrastructure that allows tokens and decision markets to be used by a wider swath of developers.
Okay. Yeah, can you break down a little bit like what Combinator is and exactly kind of how it works?
Yeah, definitely. So, yeah, like I said, like I think decision markets themselves are a really powerful tool. I think the current popular approach to using them is to protect treasury for capital formation, which I think is extremely solid as a use case, right? However, I would describe its broader use case, to be more something along the lines of like resource allocation, which I think is actually much broader. You just don't see many examples of it. So what Combinator actually is fundamentally is just a set of Solana programs that anyone with a token can use to basically deposit some liquidity in there, and it will spin up decision markets for that token. And the way that works is basically splitting the liquidity into conditional markets and then allowing people to trade the conditional markets themselves. And I can explain what all this means in more detail. This is just like the high level overview. And whatever conditional market is trading highest on average kind of determines um, like which transaction should be executed. So, for example, a team with a token can use the Combinator infrastructure to basically spin up three conditional markets, and each market is kind of associated with a transaction. So, for example, transaction A will be like, we should put 10K of our treasury in this pool. Option B, which would be we should put 10K of our treasury in another pool, etc. And then the market can basically decide based on what it thinks is best, which tokens it would prefer to hold. And so if the first pool has the best risk adjusted yield, for example, the market will basically have the option to be able to buy the token if its treasury is put into that pool. And what ends up happening is that um, you kind of get accumulated knowledge, and the best thing based on what the market thinks, like the best thing based on the market's preference, kind of happens. And so Combinator allows this, I think, very specifically to be used at the SDK API level, um, for anyone with the liquidity to spin up these markets, rather than requiring you to launch a token on the verticalized platform to be able to use this tech. And so I think that a lot of the cases can boil down to how to basically use resources effectively.
Okay.
So, yeah.
So, like, kind of differentiating this from like a full verticalized like token that must use decision markets to make all its decisions. Like, where do you think like it's valuable to like use decision markets in decision making, and where do you think it's kind of like not super valuable? And like, why do you think like a use case where a token is not forced to do everything through decision markets is valuable?
Yeah. So I think like using a token to protect formed capital, I think is really strong because basically there's no other protections for formed capital. And so I think that is an example where resources are pooled and the people who pool those resources want to make sure it's used effectively, right? But I think there are a lot of use cases. I think like the general framework I have is I think a lot of developers um, are obviously spending their time building stuff, but they don't actually know what to build. That's kind of the whole problem with like, quote unquote hitting PMF. And so I would say like, rather than startups necessarily looking for funding, I think what we're actually much more interested in is developers who want to best utilize their resources. So whether that be their time or their money. And so for example, and this requires uh, you to have liquidity to put up in the first place. And it's much easier if you have a token that you can borrow spot liquidity from. But let's say you have a high stakes decision and you want to determine the best outcome. The example I gave earlier is a bit low stakes because you're kind of just depositing money in a yield bearing pool. But I think another example is let's say like, I mean, here's another example a customer is using. Like you're running a hackathon and you want to make sure that the winners are providing maximum value to your company. Let's say your developer platform, right? And you're giving out 10K. If you basically let the market decide who wins that 10K, then you're kind of like ensuring that you've gotten the maximum ROI from that hackathon because you're getting market feedback on what they think is the most positive for your token or some entity that represents you, right? And so I think what this illuminates is basically you have something you want to do, you don't actually know what the market will react best to. And as a developer in today's world, you kind of need to guess. That's what people talk about with like iterating, right? It's like just ship it, do it fast, get market feedback, and then you'll know what to do, right? What we're saying is like you don't actually need to necessarily ship and iterate. You can get market feedback on multiple paths forward that you have, and then choose the best one. Um, and so that's what I think Combinator really unlocks is kind of just like broader, or let's call it like more generalized market intelligence. It's not necessarily the market intelligence of, oh, what do my investors think this money should be used for, right? But it's more so like I have money. I want to understand the market I'm shipping to. How do I best use this money to get a return on my time and money investment? So that's a bit abstract because I don't want to like necessarily reveal the use cases that some of our customers are really excited to share themselves. But hopefully that illustrates the point a bit more.
Yeah. And I guess, is there any type of decisions that you think these decision markets are like not optimal for, and like you'd kind of prefer like token voting or another kind of option?
Yeah, I think like in general, it's hard for me to state a use case where like voting is better. Um, Simply because I've seen scenarios where like people try to sway outcomes with no skin in the game, which is kind of what voting is. Um, and it always ends up, I think it always ends up being net negative. So I do think there are decisions that don't necessarily need to go to market. And I think those decisions involve a lack of kind of like aggregated information. So, for example, like one thing we used to try last year, which we have since abandoned, is kind of like using decision markets to determine which PRs should get merged into our code base, right? I think that's a terrible use case. And the reason is it's not like people's like the general market's aggregated opinions are going to have a better sense of what should get merged because they don't know what the code base looks like at all, right? So this is a scenario where you have like the person who's best equipped to make this PR merge decision is going to be the person who understands the code base best, right? I think that's completely separate from something where um, maybe you're like you're deciding whether to ship one of three products to market, and you want to understand which one the market will react best to. Like you literally need market data at that point, right? So I think decisions where you don't need market data and you need specialized information that perhaps you have or your co-founder has, those should not be going to decision market.
Okay. Yeah. So one thing that like on like a mechanism design that like differentiates you guys is that you have multi-option decision markets. And I don't know, like using decision markets, like myself, it sometimes feels like even complicated to trade like binary decision like markets. So like, what do you think like the benefits that come from the multi-option decision markets that like kind of outweigh maybe the complexity that they like add to a decision?
Yeah. Um, this is a great question. I think there's like a lot of components. Personally, I think the main reason that we built the multi-option in the first place is because I think there are a lot of scenarios. Like it stems from like the core value prop, which is like resource allocation. I think there are a lot of scenarios where you the resource that you're trying to optimize for is a continuous variable. So it's, for example, like how much should we pay this person for the work they did, right? Um, it's really hard to use binary decision markets in that scenario, or at least like very unscalable, because you kind of have to make up a number, put it to market. If it doesn't work out, you have to understand why, maybe put up another market with a different number, right? Whereas I think if you have multiple options, you're able to actually optimize for the magnitude of something rather than whether something should just happen or not. And in terms of like trader complexity, I actually think a lot of it is like an Overton window issue where I don't think it's ever been popular before to trade conditional futures or conditional assets, right? I actually think it's like completely novel. Like people have a hard time grasping it. Um, like, and specifically what I mean by conditional is like you're buying an asset if something happens in the future. But if that thing doesn't happen, you just get your money back, whatever you put in, right? I think it's actually just like an education problem. Like once you understand what you're actually trading, I think the jump from 2 to 6 markets or whatever, like N markets, is minimal. I think the actual education gap comes in with understanding that what you're trading are like conditional assets. But I think once you understand that, trading two conditional assets is not really different from trading six because you can always ignore additional options if you don't think it's worth your time, you know? Like you only want to express your opinions in a market where you have a preference. And if you think that like, you know, sending money to this person is like kind of irrelevant and that's like one of the options, like just don't trade it, you know? So
Yeah, that makes a lot of sense on like the, especially on the magnitude front, because it's like, all right, now you have to do another binary market and another binary market if you want to like zero in on something like that. So I really do
yeah,
see that point. You know, I guess
yeah,
there's like a few other things. Yeah, I kind of like that kind of framing of it too. And I trading myself, I think, yeah, the problem is sometimes just thinking about what's the value of something if something happening, where it's
definitely.
like, yeah, it's just like trading multiple. Okay, I kind of see that now. Um, I guess, can you talk a little bit about the projects that have used you guys so far and kind of what they've been kind of using Combinator for?
Yeah. So I think there's been a lot of discussions. It's going slower than I think growth is slower than we want it to. And I think the reason for that is because it's so new, there's a lot of, I think, use cases to be discovered, but I can touch on some of the ones that are actively being used. Um, I think one of the earliest examples was, I mean, obviously you have the treasury protection stuff, so I'm not going to talk about that much because I think that's pretty straightforward. But I think one of the earliest examples was kind of what I was insinuating before. We had a team that wanted to optimize like they raised funds, they wanted to optimize their treasury, and they wanted to decide where to deploy their treasury to maximize like risk adjusted yield. And so they spun up a market with an option. I forget if it was binary or multiple, and they just let the market decide. Right. I think that's a great scenario where it's like, you know, I think all startups obviously care a lot about runway. I think getting a safe return on your treasury is like pretty common for any company. And I think in a setting where you're raising capital on chain, it makes sense to allow those investors to determine where that capital is deployed to get the best return. So I think that was a great example of something where the decision market was very helpful for determining, kind of like collecting market information to decide what the best option was. Because you avoid scenarios where like the team decides and maybe they're giving preferential treatment to their friends or some other protocol that they know, right? Which has happened in the past. I think another example was I was also alluding to earlier, which is like the hackathon scenario. So one of the launch pads we're partnered with, they're doing something really cool. They basically will raise money for an idea, and then the raised money will get put entirely to a hackathon to determine who builds the idea. And people will basically submit like small MVPs. The best MVP will win. The tokens will be, or the treasury will basically get locked with like the allowance setup. Uh, and then that person essentially gets to build out that product funded already. So you kind of like what this solves for is basically like, you know, as a builder, I want to work on something cool, but I don't actually know what the market wants a lot of the time. And so I'll spend time building something that no one wants. That's kind of like the main failure mode for for builders. What these guys are doing is kind of flipping it on its head and saying, here's an idea that the market has pre-funded. It's kind of like the highest signal you can possibly get. And then if you can prove that you're the best person to steward this, you can build it. And this team is using the decision market to determine which builder should get to be the one that builds this idea. So I think that's pretty powerful. It's another scenario where basically capital has accumulated and you are choosing the future that is best for the asset price without necessarily having to commit to building that future up front. So I think that's really powerful as well.
Yeah, I do
Um,
think the treasury
yeah,
one's pretty interesting because like I don't know, for a lot of decisions in a company, like the core team kind of knows the decision better than the market. But for like what yield product to deploy into, it is one of those things where it's like instead of hiring like a treasurer or somebody who knows all the different yield protocols, it's like kind of the market will figure it out for you in that sort of way. So I do think that's really
exactly.
cool. Yeah, and so I know you guys are kind of actively experimenting with like different kind of versions of this, like maybe one for treasury, one for like hackathons, and you kind of are actively experimenting with like other ones. Okay, that's really cool. Um, so how do you guys think about like getting more people to use your markets? Like, how are you thinking about kind of, I don't know, increasing the number of tokens that are using Combinator markets?
Yeah. So this is something I definitely wanted to talk about because we've thought about it a lot, obviously. I think the current problem is like if you think of the market, like if you think of our market as kind of having two sides, let's call it like the decision market traders, and then let's call it like the founders that are spinning up these markets for whatever reason, right? I used to think the bottleneck was traders. I no longer think that. I think the bottleneck is basically there's not many interesting decision markets to trade, like just like overall. Like if you look at the landscape as a whole, there's not even one a day. I feel like that's pretty sad. And so what we're working on, we're spending most of our time on actually both reducing the friction to spin up both a token as well as a decision market on Combinator. And when I say reduce the friction, I mean making it completely programmatic and on chain. I think there's some parts of our stack that kind of require using our API to reserve, I mean, I won't get into details, but it requires using our API. I want to remove all of that completely, and I want it to kind of just be completely self-serve. So that's step one. I think the reason we're doing that is because we think there's actually a future where the primary user of these decision markets are agents. Um, and the reason we think that is just like if you like what we believe internally is like if you take a good look at what are going to be the largest and fastest growing markets over the next 5 to 10 years. Internally, we feel pretty strongly that that is going to involve agents to some capacity. I think the whole problem with agents right now, or at least this part I'm most interested in, is having these agents use money uh, to have like their own economy, basically. And I think the problem is humans are very hesitant to give them capital because of security issues. I think if agents are able to basically raise money permissionlessly on chain while also having that money not be ruggable, like it's literally sitting in the decision market and the agent has an allowance, right? That feels like a huge unlock. And for like getting the agent economy going, having more interesting decision markets to trade, having more interesting tokens to trade, right? And so that's kind of a future that we're betting on internally and building for. So yeah, I would say like the our core target market going forward is not even necessarily like founders. Because I think, and I can talk about this, but I think there's a lot of issues with like the current target market for a lot of launchpads out there. I think I would phrase it more so as like developers and agents who either like really don't want to or like literally can't, in the case of agents, like raise VC, you know, or go through an accelerator. So
Okay. Could you? I'd be happy for you to kind of break down your thoughts on that point a little bit more.
yeah, definitely. So I think like the Thea research guy had a great tweet about this the other day, which I wholeheartedly agree with. He was basically, and he was like responding to the Futard IL launch. But basically, he was saying like, and I think everyone in the space kind of realizes this, but they haven't like quite articulated it. Like, I actually don't think the primary customer profile on the founder side for like token launching with DMs um, are normal startups. Because I think when you think of it, or at least, yeah, I think when you think of a startup, like you think of an entity that I think, especially seed stage, like is raising capital to iterate, like fundamentally. Like you're not going to get it right the first time, right? And I think token launching with Futarchy does not help that. Like fundamentally, it does not help you iterate. Um, it helps you raise capital faster, like for sure, right? But does it help you iterate? Like no. In fact, it probably is net negative for iteration because you can get liquidated when things go bad. Um, I think you'll start to see, and this will happen, and then people will label it. But you'll start to see a new class of entity in the same way that like startups were a new class of entity relative to normal businesses in the 70s, where teams are essentially raising not to iterate but to test an idea. And then if they need to iterate, they'll wind down their treasury. So you'll start to see less of iterating with one treasury and more so like spinning up a really small treasury, testing something, being very clear and well defined about when that thing doesn't work out for X, Y, or Z reason, and returning money back to investors. And so what you'll start to see, I think what is necessary for any of these launchpads to be successful is like way smaller raise amounts. You're betting on on like an idea, not a team, right? Um, and when things aren't working out, money is returned gladly. I think if you're a founder and you raise on one of these mechanisms, like for something very small, perhaps you are experimenting in the market, iterating a little, you think there's no market demand. I think you should gladly give money back to investors because from what I've seen in traditional VC, founders that do that are able to raise 10x easier the next time because the discount that you've received on your first round for you being in kind of a question mark is now massively reduced because you've literally given back money when things weren't working out. So yeah, I think you'll see
How
a
do you
lot
think
of
about like
yeah.
for like because I don't know, I was thinking about this idea too. How do you think about like dilution and like in terms of like if you raise like I don't know like $50,000, $100,000, and then the idea is a massive success. It does feel like the founders launching on this very like low market cap idea have like effectively like given away a ton of their like equity, let's say, or something like that because they're raising on such a small idea. How would you think about like structuring kind of like the like I don't know founder gain on something like this?
Yeah. I think like it's an open question. I think also to be clear, like I think 50 and 100K are like still way too high. I think it should be like probably lower than 20K. Like literally like a month or two of salary, right? But yeah, I think like there is still you can consider a dilution problem up front. To me, I think the game is kind of different though, because it's not like you're trying to protect a lot of equity up front and then you get diluted over time. It actually feels like what's more correct for tokens is you give a lot up front, but then as things go well, you as the builder get rewarded. So kind of like the performance packages, whether those are time based or price based. Um, yeah, I think that's like the best move. Like you basically unlock as the token grows in value, and you'll end up in a scenario where you actually own a lot of the token um, for the work you put in. Yeah.
Okay. And then I don't know. So for people who are thinking about like maybe launching on Futardio or launching through MetaDAO, like what's your kind of pitch to people like that they should kind of launch a token, not directly on like a MetaDAO launchpad, and then like integrate you guys when the decisions make sense?
Yeah, I think that's a great question. I think it kind of ties into what I said earlier. Like, I think it depends on who you are. So if you're if you're a typical startup, like we're kind of not building for you. Uh, that's like the very direct answer. Like we're really focused on like individual devs and their agents, kind of in this like new agentic economy. And I think a lot of the product decisions we make are a reflection of that around like extremely low friction for creating these things and whatnot, rather than like having a verticalized stack with a bunch of like investor connections and distribution. So I would say like step one, like if you need to raise a lower amount, like I guess I would suggest this. Like you probably don't need 50K. If you are thinking about your startup as in I need to raise a bunch of money so I can iterate for a year, like we are not built for that. We are built for you. We are built for the developer or the agent, and perhaps like the special type of startup where you want to raise very little. You want to test something. If there's continued market success for what you're testing, you can raise more in the future with the exact same mechanism. But if not, you can just return the capital and do something else with your life. So I would kind of break down what the actual market and problems are before recommending anything. Like I think if you're a typical startup and you want to iterate for a year on a treasury, um, like go with MetaDAO or go with VC or go with Accelerator, right? I think if you want to raise like 20K or less as fast as possible so you can like start building, um, I think that's when Combinator starts to make more sense. Because you also have like more control over your token, you have more control over how the decision markets are used, etc. I just think it's like a much faster paced and lower commitment arena. That's probably how I describe it.
Okay, yeah, totally makes sense. So you guys have a token, and can you kind of talk a little bit about how your token kind of, first of all, like collects fees from the platform you're building, and how the product and the token work together?
Yeah. So I think the fee model is pretty standard. We just take 0.5% on swaps. That gets streamed back into our tokenomics. Um, I think the tokenomics are, it's kind of a whole conversation. I could speak a lot on it, especially for like founders who are thinking of launching tokens as well. But to me, the TLDR is like, I think tokenized equity is kind of what's the word? It's like a red herring. Like, I don't think that that's what you should be optimizing for. And this is kind of what I was alluding to at the beginning of the call, but I think if you're tokenizing your equity, you're basically doing a disservice to what tokens can really be used for, which I think are like getting people to really believe in something and work for it at scale. And I get a lot of flack for the following analogy, but like if you look at something like Ethereum, like the people who are earning ETH on a daily basis are the ones that are providing valuable services to the ETH network by validating, right? And same with Solana. Um, and I think there's tons of other examples, even newer ones. I think what you want to do actually is you want to set up a token that is basically like converts product demand into token value and then distributes that token to the people doing work for the network. And that's really abstract. Like what actually happens for ZC is like it's not an equity token. We have tokenomics. What happens is all of the swap revenue, so 100% of it, that gets accumulated both on spot fees and decision market trading, goes to the staking vault. And the staking vault basically distributes the revenue proportionally based on your trading volume on decision markets. So pretty simple from that perspective. What we want to do is basically set up a kind of continuous flywheel where as people use the product, so let's call it the demand side. So these are founders who want like market intelligence, right? Let's call it. They're paying with trading volume that gets distributed directly to the people who are helping make good decisions, which are the decision market traders. And then I think what we want to happen, and I think what we've seen happening to some degree, albeit slowly, is the decision market traders, because they're getting paid, will continuously come back. And then you kind of have a scenario where decision markets on Combinator are going to be the most truthful because this is the most incentivized and aligned capital to be trading these markets out of the box. Um, and I think the final components of our model is, I mentioned it's a staking vault. Like you don't just get paid, you get paid nothing unless you're staked. And so basically you stake the token, but your rewards are not based on your staked amounts, they're based on your trading volume. And so I think we're pretty happy with this. We basically set it up such that the people who are very aligned with the network and providing value, which is people who are staked and providing or trading decision markets, right, directly earn from the revenue um, that the demand side brings in.
Is there like a ratio of like how much tokens you have staked, then like some proportionality there?
Yeah. So the way it works is like, and these are like configurable, but the way it works for us is that you cannot earn more than your staked amount per week. And then it just maths out, right? Like if you're all the volume, if you have like 100 mil staked and you've earned like 100 mil from your trading volume because there's so much revenue coming in like 2 days, you'll need to stake more to earn more, right? Um, and then what happens is as a result of that is basically staked amounts will increase, which will basically provide higher guarantees for the founders because they can basically come to Combinator knowing there's like $5 million of capital staked that are basically going to ensure that your decision market gets volume and attention.
Okay, that's actually pretty interesting. I didn't know that that's how the token worked. It's kind of a really cool flywheel to kind of get people to use the markets more. Um, are there any features that you guys are like kind of shipping or like working on soon, or like things you're excited about coming out on the platform?
Yeah, I think a lot of it is agent focused, like I was mentioning about like the growing markets and whatnot. But yeah, I think it's kind of what I was alluding to throughout the call, which is just like we're going to be shipping an SDK soon. I mean, there's actually multiple things. Like we're basically going to ship a hosted version of of OpenClaw that basically comes out of the box with the ability to launch tokens and launch and trade decision markets. And we're hoping like what will happen is that these open claws will basically be able to form their own economy because they also come with out of the box like agent to agent communication between them. So I think what we hope to see is basically people can spin up these open claws as needed. They'll automatically, they don't have to provide any API keys or anything. Like we'll set that up for them. So it'll be free. And they'll have tokens associated with each of them that basically go into a protected treasury. And then those agents can use their allowance to basically exchange goods and services in between them. So it's kind of like an experiment. But I do think it'll be pretty interesting to see what kind of decision markets these agents spin up. And I think there's a lot to support all that, like making the Combinator SDK very smooth and available for everyone, making the UIs for trading these DMs smoother and more available, making it more clear when there's live DMs, because I think a lot of our traders right now don't even know when some of these things are happening. So I think that's like kind of the near term thing we're pretty excited about, and there's a lot of stuff that goes into that.
That sounds really cool. And I feel like there's not a lot of like autonomous stuff happening on Solana yet. There's a lot of kind of pseudo autonomous stuff happening on base, but to actually like have agents that can kind of do that would be really interesting to see them spin up. And even if they do dumb stuff, I mean, there's probably a lot learned in kind of doing that and putting them.
Yeah, I think it's funny how you called it pseudo autonomous because like yeah, that's like kind of the problem I think. So we're spending a lot of time like making sure the agents kind of are active by default and have like kind of a directive to like pay for goods and services they find valuable. So yeah, I think setting up that environment will be pretty interesting.
Zooming out a little bit, like not directly on your what you're working on, but like on the kind of crypto ecosystem overall, like what sort of stuff is like kind of exciting you right now? I feel like a lot of people are, I don't know, in the dumps about the market, but like what things kind of have you hopeful about working in crypto?
Yeah, I think it's important, and I definitely actually encourage people to do this. Like, I think it's important to actually look at crypto. Like, if you're in crypto, like actually look at it and be like, what does it uniquely enable? And for me, when I ask myself that question, I think a lot of it involved like scalable coordination. And I think tokens are a big part of that. Um, and so I think there's a lot of stuff around like I think actually meme coins to some extent are also scalable coordination. I think people perhaps don't like it as much because they feel like there's not many positive externalities. Um, but to me, I think two things that specifically I think are really interesting about crypto, besides like all the agent stuff and how I think that'll be the coordination layer that I've already mentioned. I think polymarket and prediction markets in general are one really cool feature, or let's call it like category of crypto. I think a lot of people don't consider it crypto because like Kalashi exists and it's not built with crypto rails. But I think like from what I've seen in the history, um, I think the fact that like Polymarket was kind of first and built and came out of crypto very directly, like Shane has been like very into crypto for years and building in the space. To me, like prediction markets and novel markets are really cool. And I think you'll find more of those in crypto. I mean, like if those exist anywhere, they'll be in crypto, right? So I think finding new ways to basically spin up markets that elicits novel information, I think are extremely cool. And decision markets is obviously like one of those. I think the second thing that's super interesting to me is actually like all the stuff going on with Double Zero. So I don't know if you've heard about it or seen them, but they're kind of building a new internet layer. It's kind of like a DePIN project in the sense that they have their token is kind of incentivizing nodes to be spun up and fiber optic cable to be like laid globally. And I think like they spun out of Solana. I think they're already doing extremely well in terms of their usage and growing. So I think like DePIN projects like that, um, that are just like, classic able to use a token to spin up, uh, you know, heavy infrastructure that couldn't otherwise exist, I think is also super cool because I think it's kind of uniquely enabled by crypto. And there's other deepin projects as well. I think, the term deepin kind of gets a lot of flack because I think it kind of assumes that you need a physical infrastructure build out. But I think there's definitely a lot of smart people talking about like the principles of deepin, but more just like fully software based. So I think like projects that are essentially using tokens to elicit like worldwide participation um, are extremely cool. And Double Zero is just like one of those projects.
Yeah, very cool. Yeah, those things. Yeah, yeah, that's interesting, and I think there kind of was like a hype wave. It kind of got overvalued, and now like we're kind of getting
Yeah,
back to the like, all right, what can this actually do?
definitely.
Yeah, I think that's a great way to kind of wrap this up. I really appreciate you coming on and sharing what you're working on.
Yeah, thank you so much. I was super happy to be here. Yeah, I've been looking at your content more recently, and I think it's very well done. So keep doing what you're doing.
Appreciate it.
Yeah.